Yo, what's going on, guys? So in today's video, we're going to be going over ICT, just algorithmic theory, Corley theory, Romeo's turtle soup, and mixing that along with standard deviation. Psych! Also, don't forget to use that Apex discount code, 80% off, and join my Discord, WAP link in the description below. Dude, why would I go over that? Why? Okay, if you believe me, dude, we don't need any of that. Okay, all we need is candlesticks, fair value gaps, and liquidity. Okay, that's all you need. All right. If you really came to this video and really thought I was going to talk about all that BS, dude, why do you need that? Okay, would you rather not look at the chart and literally just look how simple this is? Ready? Watch this. Ready? I'm gonna draw a singular fair value gap. Oh, look at that. Oh, it's broken. I use the support. Oh, that was so hard to determine, right? Like why do you need all that other stuff? Okay. Singular fair value gap here. Respect it. Oh, but I thought I needed quarterly theory and standard time deviation, whatever, blah, blah, blah. You don't need any of that. All right. Again, I want to emphasize this video. Okay, you do not need quarterly theory. You do not need any of that stuff. I know it can help. Okay, I understand that. But if you see the market in terms of fair value gaps and liquidity, that's all you need. You don't need anything else. You don't need new week opening gaps. You don't need new day opening gaps. Okay. I see the market in terms of fair value gaps. Where are we delivering from? Right? When I see the market bounce off this fair value gap, I don't care what time it is. I know that's bullish because one, we bounce off this fair value gap, and two, we break this one. Right? Nothing about that is bearish. Okay. You don't need quarterly theory to tell you that. All right. Like same with open. Okay. Or same with even right here. Okay. We get displacement here, right? Look at all this displacement over this high. Right? You don't need quarterly theory to tell us, oh, we're going to bounce off this fair value gap here. Right? You don't need that, guys. So, again, if you got psyched out at the beginning of the video, you probably don't know me or this is your first time clicking your video, but all you need is fair value gaps, liquidity. Okay, there's only two things you need, all right? Maybe order blocks. So, this video really isn't about anything. Again, I'm not really sure what to teach in this video because there's nothing to teach technically wise. Okay, I'm trying to teach people like I came into this market once and I used to use all this other stuff like fibs. I used to use all these fibs and I was like, oh, this is going to be Enigma. This is going to help me a lot. And I quickly realized when I actually started trading, I started off with very little and I only used price and structure because that's what I first learned. And I'm like, oh, this is great. And then I got into all these indicators and I started using all these indicators and I started doing worse. And I'm like, how am I doing worse if I'm using all this other stuff? That it made no sense to me. And I quickly learned that because of how many indicators and just other things out of my chart, what would happen is, let's say, for example, I'm using OBs, breaker blocks, mitigation blocks, standard deviations. Okay, let's say I'm using that all in one. What would happen is I'd be like, oh, here's a bullish breaker, but here's a bearish OB. Like, which one are we going to reject or bounce off of? And I didn't understand. And that's obviously, I don't actually think that right now, but that's kind of the feeling I used to get when I used to start off and I used to see, like, I used to try a million different things in the chart. And I'm like, well, if I try a million different things in the chart, I'm going to be better. And that was not the case. I was actually worse. So, just that was a little backstory of I actually became more successful taking more off my chart. If you guys watch me live trade, I barely have anything in my chart all day. Like, if I was trading alone, I would not draw a single thing on my chart. Okay, and that's only if I was trading alone. Because I trade and stream, I will draw out like the fair value gaps or whatever I'm looking at. But like I said, I don't need anything. I look at my fair value gaps myself. I don't need to draw them out. I look at the fair value gaps. I look at the highs and lows. You can tell if highs and lows are engineered. Like, you can clearly tell high here, high here, high here. Like, you don't need to be a genius to tell these are engineered stop losses. Okay. And again, I have no hate against anyone who does all this quarterly theory and stuff because it works. It's not necessary. Okay. And if it's not necessary, it's going to be inefficient for you as a trader trying to learn simplistic methods. Okay, it's going to be inefficient for you to put in all this work just to get like a 40-point play when you could just take a fair value gap or an inversion, 20 points, 20 points, 20 points, 20 points, over and over and over and over and over and over again. You don't have to put on all this work, right? That's the beauty of simplicity. Okay, you don't need all this other stuff like I had drawn on my chart. And yeah, that's really all I want to go in this video. Again, you can test out other stuff. I know people ask me, like, what are my thoughts on standard deviations? I don't think standard deviations are bad. Like, I've used them in the past, okay? If I were to draw a standard deviation here off this manipulation leg, okay, I've used them in the past, all right? And they're not bad, okay? But they're nowhere near what I'm really looking for in terms of analysis. I can do analysis without looking at a standard deviation. Okay, and again, I understand they have some weight to them, right? Whether you draw a standard deviation off of London or Asia range or whatever. But do I need my analysis? No. Same thing with corollary theory, right? I don't need corollary theory. Same thing with the time thing, the TOT, T-O-T, or TAPTA, okay? If you guys know TAPTA from Zusi, right? I don't need that. I don't need to look at times of, oh, this should happen, because usually it lines up with an inversion model when we get it anyways, okay? So this is just a little reminder. You don't need to overcomplicate things. Okay, I literally have a model. I'm profitable with it. I don't need to use all this other stuff. Again, I know it looks appealing on Twitter when you see it, because you think, oh, that looks so cool, I'm going to use all that. And in the end, it just tends to hurt me. Okay, it may be different for you, but I know a lot of people are going to agree with me, so that's why I'm making this video. And yeah, that's really about it for today. A little gem, I'll end off the video with this, how I found the bias today. So again, bias is pretty easy today. All I used was this 4-hour inversion. Okay. So yeah, that gave the bias back to these highs which we hit today. So again, singular bearish fair value gap gets broken, a lot of momentum back through it, tells us we're going back to the external high. So I mean, that's just a little jump for end of video. But that's it for now. If you got this far, comment the word bell. And yeah, I will see you guys later. Peace.